Hi, let's look again at Fantom, ticker symbol FTM, currently at $2.30, going up by more than 10% today. Fantom is at market rank 39, so it's the 39th largest cryptocurrency. So we are looking at a market cap of approximately 6 billion. Now on this channel, we look at Fantom quite often actually. The last video wasn't timed too bad. It was titled Why $3.30 is Expensive for Fantom. And that was over here, and since then we have come down quite a bit. But does it make sense to jump on this recent rally over here? Are we now recovering and on the way to new heights? That's what we're going to discuss in this video, and what we're going to use is, as usual, technical analysis. But we will also look at on-chain data, at usage statistics, at value locked statistics, things like that. So first of all, this is the value locked of the Fantom blockchain on DeFi Llama, currently 5 billion. And of course, this chart isn't going down, but we are pretty much now in a sideways movement for around 1.5 months. So no additional value locked. If we look at this in Ethereum, this even looks worse. We are going down because Ethereum during this 1.5 months went up. The same kind of trend can be observed when looking at the bridge statistics. So when you bridge over your assets, for example, from Ethereum to Fantom in order to use the Fantom decentralized exchanges, that kind of bridging is going down, right? People are removing assets from the Fantom blockchain. And that's also pretty much happening since the 10th of October, something like that. So these trends are pretty much aligned here. In case you're not familiar with bridging, it basically means you commit your asset, say, which is on the Ethereum network. You send this to a smart contract. So in this case, for Fantom, the AnySwap bridge is what's mainly used. So you wrap your Ethereum, you move it to the Fantom blockchain, and then you can use that wrapped Ethereum on decentralized exchanges such as SpookySwap, which is the main DEX, the main decentralized exchange on Fantom. Now, why would you do this? For example, to save on gas fees, right? Swapping assets within the Ethereum blockchain is expensive. You pay more than $50 or so for each swap. When you do the swapping on Fantom though, you pay less than $1, right? You pay just a few cents. So when your target, for example, is to time the Bitcoin market or the Ethereum market and to move in and out of those markets by using stable coins, and you don't want to do this within a centralized exchange such as Binance, but you want to go around KYC, for example, then you can simply use a decentralized exchange with small fees, and SpookySwap is one of them, right? The gas fees, they are low, and the fees that the DEX takes is also relatively low. Uniswap takes 0.3%, SpookySwap takes 0.2%. Another reason why you might want to bridge your assets to Fantom is for providing liquidity to a pool, right? When you deposit assets to a liquidity pool on an automated market maker such as SpookySwap, you can get a share of the fees that SpookySwap generates. So you put in 50% Fantom, 50% wrapped Ethereum, and when you hold your money in that pool, you can get an annual return of 43%, minus something called impermanent loss. So before you do anything like this, learn about impermanent loss. But definitely it does look like this is a pretty good alternative to simply keeping your money in cash in a bank account. But of course, you've got price risk. Fantom might go down, Ethereum might go down, or the value of those assets, they might just grow too much apart from each other, and then you experience impermanent loss. Now, the statistics around the bridge are not nice. The value locked is not particularly impressive, but what still looks relatively healthy is the activity on the DEX. So these are the stats for SpookySwap. The liquidity in those pools is rising, and so is the trading volume. So people use the app, it's not declining at all, but still Fantom is suffering. The reason why Fantom is suffering is because of Geist finance. Geist is losing a lot of total value locked. And the reason for this decline could be a topic of a separate video. But the thing I'm mainly interested in is, does it make sense to jump on this recent rally over here for Fantom? Now, one thing I like to look at is at relative valuation. So not Fantom denominated in US dollars, but Fantom denominated in Ethereum, because effectively Fantom is a competitor to Ethereum. It tries to attract the funds from the Ethereum blockchain. And so when you take on more risk by investing into Fantom, which has got a market cap of 6 billion or a market dominance of 0.2%, versus investing into Ethereum, which has got a market dominance of 20%, so which is around 100 times larger. By taking on that much more risk, you should expect an outperformance of your risky altcoin versus the less risky Ethereum. And over the long term, we do see this outperformance, right? Almost 400% more return since October of 2018. But of course, this return came with quite a bit of volatility. So we did see temporarily drawdowns versus Ethereum of 85% over here or 78% over here. So timing the market does make a lot of sense. And that's not just for relative performance, that's also for crypto markets as a whole, right? If you buy crypto and hold onto it for dear life, you can experience incredible volatility. This, for example, is the crypto winter. For Ethereum, we went down by 94%. So really, you want to time the market, you want to exit when momentum turns bearish. And if you're a regular follower of this channel, you are familiar with this strategy. A simple strategy that buys whenever the price is above the moving average and that sells, that goes completely in cash whenever we are below the moving average. So this way we try to be outside of the market when prices tend to decline, and we try to be in the market when prices tend to increase. So a simple momentum following strategy. The only question is, what kind of moving average should you take when you trade according to such a strategy? And when you do back testing, you find out that the 23-day moving average and the 39 moving average, they historically work the best. The portfolio line increases quite consistently for both of those moving averages. And this is the summary. You would have gotten way more return per annum by following that strategy with those two moving averages. And so when we look now at the 23 and the 39-day moving average for Ethereum, things don't look too pretty. Ethereum, at least historically speaking, doesn't seem to be in a good state. Momentum tends to turn bearish. And of course, you can draw all kinds of lines. You can't really backtest this. But those two moving averages, they are backtested. And since the correlation of returns in US dollars between altcoins and Ethereum is relatively high, so on average, we're looking at a correlation coefficient of 0.65. Since the price movements of Ethereum and Fantom, they follow quite similar patterns. Here, for example, look at this. Here's a top, here's a bottom, here's a top. Let's look at Fantom. Here's a top, here's a bottom, here's a top. So we tend to have corrections and rallies at similar points in time. And so that's why it makes sense to not look at Fantom in isolation, but to still keep an eye on general crypto and to watch the main competitor. If Ethereum was to go down by, say, 50%, I'm not saying that has to happen, but if that was to happen, I can pretty much guarantee you that Fantom is not going to make any gains in US dollar terms. The correlation between crypto assets is simply too high. So my take on this is, since Ethereum doesn't look healthy right now, and since a lot of momentum is not positive for Fantom right now, simply because of those two reasons, I think it's best to stay on the sidelines for Fantom for now. And the way I personally do this is, I still try to get a little bit of yield from this. So I go to Curve Finance, the Fantom-based curve. So that's ftm.curve.fi. And that's the pool I provide liquidity to. So we've got two stable coins, no price risk here at all, no exposure to the volatility of crypto. And in here, by providing liquidity to that pool, you get 13% annualized return paid out in Fantom, another 3% paid out in CRV, so in the Curve token, and then even a little bit of return on the stable coins. So you're looking at a total return per annum of around 17% for simply being in cash. And I personally feel more comfortable holding that kind of position now, rather than being risk on in Fantom and potentially losing a lot of capital in case crypto stays bearish for the next weeks. If you enjoyed this video, please give this a like. YouTube will then help to grow the channel. And if you haven't yet, feel free to subscribe as well. I publish videos regularly. Last but not least, we've got a Telegram channel. We are more than 1,200 people now. You can find us simply by clicking the link in the video description or by searching for Bitcoin Strategy Channel within the Telegram app. Would be great to see you there as well. See you next time. Bye-bye.